Your parents are getting up in years, but the mortgage on their house is finally getting small. Place needs repairs, though, and there's a guy pushing them to sign some construction loan papers. How can you be sure this isn't a move to take their place instead of fix it? Can you tell when the interest rate is just a rip-off? Aren't there laws protecting people from loan scam artists? And what are the warning signs? Saving your nest egg and the nest on the Layman's Lawyer, coming up next.
Major funding for the Layman's Lawyer is provided by the Georgia Civil Justice Foundation. The foundation publishes a free quarterly newsletter to teach you about our legal system. The foundation's number is 404-522-2744.
Hi, I'm Dennis O'Hare. Welcome back to the Layman's Lawyer. With the big boom in the price of Atlanta houses, there's been an increase of a more disturbing kind: the numbers of homeowners facing foreclosure because they can't pay back their loans. Federal officials have been investigating whether some of these folks were talked into loans that they had no hope of repaying by people who wanted to take the places and then resell them for a profit. It's called predatory lending, and it's awfully tough to police. So what are the rules for the money people, and what kinds of protection do homeowners have? We'll look at that tonight. With us for this edition, Howard Rothbloom, a sole practitioner who represents customers, and Terry Franzine of Franzine and Salzano. She represents lenders and mortgage brokers. Welcome to both of you. It's nice to have you.
Thank you.
Is that a pretty good description of predatory lending, Mr. Rothbloom, just to start out, the idea that you basically take somebody's house and resell it for a profit? Is that one of the things that predatory lenders try to do?
I think that's a good definition. Predatory lending is abusive lending, usually targeted at elderly people and low-income people. And the whole idea is to strip the equity out of the house.
Okay, so let's take that one at a time. What's the equity in the house, first of all?
The equity in a house is the difference between what's owed on the mortgage and what the value of the house is.
Okay, so in other words, the equity would be what would come to the owner if the place were sold after the loan were paid off. In other words, the profit that you would make if you sold your house.
That's right. And there's profit because you paid down your mortgage, and also houses appreciate in value.
Okay. And what the predatory lender tries to do is to get that from you.
That's right.
Okay. Then, all right, is there, Ms. Franzine, is there a term in the law called predatory lending? I mean, is there a law that says this is predatory lending and you can't do it?
No. There is a federal law but all it does is it defines when you have to give additional disclosures, so that if there are a certain number of points or a certain interest rate on a loan, there are additional disclosures, but there aren't real prohibitions.
Okay, so some of the things that people allege are being done to them are perfectly legal,
right,
in other words.
Right.
Okay, so how do you know when you've got predatory lending?
It's very difficult to define. You have to, I think, look at the individual circumstances of each loan, and see if there are one or more things that I would call kind of red flags.
Yeah, and we'll get into those in just a minute. There were a couple of things I wanted to get to right before that, but in other words, there are techniques that people use to basically, quite legally, in most cases, take control of somebody's house.
Right.
Wow. Where do we see this most often, Mr. Rothbloom? Is it in like a new house or a construction loan or refinancing? Where do we see it?
Typically, we see it in older houses, and older houses oftentimes are owned by older people. Older houses also need a lot of repair because they are old, and they've deteriorated over a period of time. Lately, we've been seeing a lot of predatory lending occurring in the oldest neighborhoods of Atlanta, inside the perimeter.
For a couple of reasons. Not only are those places old, but they've gone way up in value lately, so there's a lot of equity in those places, right?
Absolutely, and with gentrification, those neighborhoods are hot. A lot of people want to move into those neighborhoods, get their hands on those houses.
Okay, and so for somebody who wants to take the house and resell it, boy, that's an easy thing to do.
Absolutely.
Okay. Are we seeing an increase in sort of abusive lending right now in the Atlanta area?
I think we are, I get a lot of calls from people who are unable to make their loan payments because they got into loans that they couldn't afford to make at the time the loans were originated.
Okay. Ms. Franzine, are there a lot of rules and regulations? You said there aren't a whole lot of prohibitions, but are there a lot of rules that lenders and brokers have to abide by when they're making loans in Georgia?
There are. There's a usury in Georgia, but there's a very high rate in Georgia at 60% per year.
And when you say usury, that means, and 60%, that means that's the most they could charge on a loan?
Right.
Well, nobody charges 60%, right? Not very often.
Hopefully not on a home loan anyway. But then the other laws that you have are mainly disclosure laws, and they're to protect the customer so that prior to the transaction closing, the customer can actually see what the charges are going to be. So, for instance, for what the lawyer's fee is going to be, and if there's a mortgage broker, what the broker's fee is going to be.
So is it safe to say then that if you're somebody borrowing and you're wondering what the rules are for the person who's loaning you the money, or the bank that's loaning you the money, or whatever, most of the rules that those money people have to abide by don't tell them you can't do something. They tell them, if you do it, I've got to know about it.
Right, right.
Wow. Okay, so really they can pretty much do what they want within just a few very broad limits. Is that safe to say?
That's true.
Okay. Mr. Rothbloom, then how do you protect yourself? I mean, how do you start shopping for a loan, especially if you're somebody who may not have a lot of money to help pay that loan back?
The most important thing is what you just said, that you shop for the loan, that you shop around. A lot of the people who are targeted for predatory loans are older, they're in poor health. A lot of times they're just not very sophisticated borrowers, so the idea of shopping is somewhat foreign to them. For those people, I suggest that they get an advisor, whether the advisor is a relative or a friend who's more sophisticated in consumer matters, or even a lawyer to assist them. Okay. Those borrowers can go to, a lot of times they're eligible to go to a housing counselor, maybe through Consumer Credit Counseling Service or through the county that they live in, and that county can give them, that county agency can give them good advice as to what they should do in regard to obtaining credit.
Is housing counseling, for instance, available to anybody, or is it pretty much on an income, you know, if you're below a certain level of income, then you're eligible?
I'm not exactly sure the qualifications, but typically they do serve a lot of older borrowers and a lot of low-income borrowers who generally are less sophisticated consumers.
And you can get in touch with them through the county government?
Yes, you can. In Fulton County, there's an organization called the DeKalb Fulton Housing Counseling Agency. There's also a similar type agency in Gwinnett and in Cobb, and Consumer Credit Counseling Service has certified housing counselors.
So shop around for a loan, talk to different lenders, learn as much as you can. That's number one. Use housing counseling if you can qualify for it or if you think you need it. And then you look out for the red flags. And Ms. Franzine, what are some of those? You talked about those a minute ago.
Well, I think the first thing to look for is the interest rate on the loan. I mean, anybody can read the newspaper and see on Sundays they publish what the rate is. And if the rate that you're being offered is significantly higher than the rate that's published in the paper, I think you should ask why.
Now, it's also important to point out that, let's say you read the paper on Sunday and you're going for a loan, even on Monday or Tuesday, rates will change.
Oh, sure.
It's not going to be exactly the same,
no,
right?
It's not going to be, but it should be in the same ballpark. Another thing is what points or what fees you're paying your mortgage broker. You know, it's typical, I would say, to pay a couple points, but if you are with a mortgage broker who might be charging you 10 points or more, then I think you need to ask why. You know, why am I paying those kinds of fees to you? And shop around, like Howard said. I mean, just because you talk to one person about a loan doesn't mean you have to close the loan with that person. Go to another person. And those mortgage brokers or the lender that takes your application is required to give you a disclosure within 3 days of application that tells you exactly what the fees are going to be. So once you get that piece of paper, the whole point for you to get that is so you can take that to another lender and shop it. So you need to do that. You need to avail yourself of the protections that are out there.
Okay. Once you've closed, though, even, let's say you've gone all the way to closing, do you have a cooling off period, or even where you can say, okay, on a loan this big, I can cancel the transaction?
It depends.
Our favorite answer.
It depends. If it is a home purchase, then no, you cannot. But if it's a refinance or a second mortgage, then yes, you can. You have a 3-day period within which you can cancel the transaction.
Okay. Construction loans, are they any different from a refinancing or a purchase, Mr. Rothbloom, in terms of what the lenders will do? Like a rehab?
Maybe Terry can address that
Is there
a
anything
little bit
different
better.
in terms of the nature of that loan?
Well, on a rehab loan, it's typically a second mortgage or a refinance. A lot of times what they'll do is they'll take your first mortgage and refinance your first mortgage and then add in the amount you need for your home repairs. And in both of those situations, then you do have the 3-day cooling off period.
Okay. So watch out for some of those red flags, and we'll talk about some of those as we go along here. But one of the things we should point out again is that a lot of this stuff is perfectly legal, right, Mr. Rothbloom?
Absolutely. A lot of the aspects of the predatory lending scheme are perfectly legal. Presently, however, I'm working on a case where there was a certain type of insurance called credit insurance sold in connection with the loan, where it turns out that insurance was illegal. And in fact, the Georgia Insurance Commissioner ordered the lender to stop selling it in connection with the type of loans they were selling it.
Let's talk about that, because that is one of the red flags. What is credit insurance?
Credit insurance is supposed to be insurance that pays off the loan in the event that the borrower dies, or pays the monthly mortgage payment in the event that the borrower
Is there anything
becomes
wrong
sick.
with that, just by definition? Is credit insurance in general a bad thing?
It's not in general a bad thing, but we caution our clients that they shouldn't get credit insurance where they pay a lump sum premium for coverage for an extended period of time. The type of insurance that we advise people to get is insurance where they pay the premium on a monthly basis, and it's not financed in with the loan, and it's not secured by their house.
Yeah,
That's the best type of credit insurance to get.
What kinds of problems then do people run into with credit insurance if it's financed as part of the loan?
Well, the problem is that the premium, which can be quite hefty, I am seeing premiums for $5,000 to $7,500 on $35,000 loans. When you finance the $5,000 or the $7,500 in with the loan, it makes the monthly mortgage payment that much more unaffordable for the borrower, and makes it more likely that the borrower might default and ultimately wind up losing his or her home.
So the lender could foreclose. And so then, Ms. Franzine, if you're looking at credit insurance and it's part of the deal, is there something you can do to say, okay, here's what I'll do to make sure that it does what it's supposed to without me losing my house?
Well, and I think you need to back up 1 minute, because credit insurance is never really part of the deal.
It's
you
not.
have to, there's again a disclosure that you have to sign specifically electing credit insurance, and so you have a choice. And you should not use credit insurance in lieu of life insurance. You know, if you have regular life insurance, then, you may not need credit insurance. It depends upon everyone's individual circumstances. But like Howard said, if you are going to choose credit insurance, then you want credit insurance that is paid on a monthly basis and not paid in one lump sum and financed over the term of your loan.
Okay. How about balloon payments? That's another one, Mr. Rothbloom, that actually, I mean, we've heard that term for so many years. It's actually something that was used particularly when mortgage rates were very high. A lot of people used them and knew that balloon payments were there and that they had to, at the end of the loan, there'd be a great big payment, but that was then called creative financing.
Yes.
It was something that everybody did.
I suppose you'd call it creative financing if you know going into the loan that you are going to have a balloon. It's predatory lending, however, if when you go into the loan closing and you don't know that there's a balloon at the end of the loan, and in fact you might walk out of the loan closing and not know that you signed documents that are going to require that you make a payment of almost the exact amount that you borrowed 15 years later. that's predatory lending. So the serious thing about a balloon payment is, at the end of the loan, whether it's 10 years or 15 years, the borrower may owe exactly what the borrower borrowed at the beginning. And in fact, all the borrower was doing,
paying off interest,
was paying interest all those years.
Yeah. So does the lender, though, again, have to spell out in detail in advance, yes, you've got a balloon payment here at the end of the loan?
They do. However, the problem with predatory loans is they're even closed in a certain way that is abusive. Typically, the borrower isn't given an opportunity to really study and understand the loan documents, and they really don't know what they've done after they walk out of the loan closing. So it's a process that requires a lot of attention. Even though there are disclosures, it can be a very confusing process, and the borrower needs to make sure that everything has been explained thoroughly, and the borrower should never sign blank documents and never sign anything if the borrower doesn't completely understand what's contained in those documents.
What's flipping, Ms. Franzine? That's a favorite term that's again been thrown out when folks are talking about predatory lending.
Right, flipping is when a borrower has a loan, then another lender comes behind the first lender and refinances that loan. And then sometimes that same lender or another lender will come back in within a very short period of time, less than a year, pay that loan off. And it's a cycle. It goes on and on and on. And
but is the borrower signing papers
every time?
Every time?
Every time.
So what's the sales pitch then? Why would you want to keep doing that?
You know, I can't imagine. I mean, really, because the loans that I've seen, many times there's not a lower interest rate to the customer. And so if someone approaches you to do that, then I think you need to look carefully at it. Is it going to lower my monthly payment? So that would maybe be a benefit to me. Or is my interest rate going to be lower so that over time I pay less interest on my loan? Because the problem with flipping is every time you do a loan closing on a real estate loan, there are lots of fees. You have to pay attorney's fees, there's usually a broker fee, there are points that you're paying, and then there are recording fees, there's a fee to the state. So every time there are these fees, and they just multiply when you have more and more loans on your property. And of course all those fees get financed into your loan. So now, like Howard said to begin with, the amount of equity in your house gets smaller and smaller because your loan amount is getting larger and larger.
And you're having to make your monthly payments are probably going to be higher unless the interest rate is really better, which is why you refinance in the first place in a lot of cases.
Exactly.
You want to get a better deal, but if the deal isn't better, you end up paying more, and chances are then that you might fall behind and somebody could take your place.
Right, that's true. That's true. And sometimes, I mean, there are legitimate reasons to refinance in a short period of time. You might have an unforeseen need. There might be a medical emergency, or, you know, you need a new roof on your house, and it's a legitimate need. But, I mean, I just think people really need to be careful.
Being behind on your loan is not a good reason to refinance. There are other options that a person should explore rather than refinancing. The only party that is benefited by a predatory lending refinance is the lender, not the borrower.
Mr. Rothbloom, is there any way to tell you're being flipped, or should it be obvious?
It should be obvious, but in predatory loans, typically the loans are refinanced because the borrower is behind, and if that's the case, the borrower should explore perhaps doing a Chapter 13 or even borrowing money from a friend or a relative in order to catch up the loan if it's just a temporary type of a situation that caused the borrower to go into default.
Okay, and if it's a situation that you realize, well, this is really changing my life, it's not temporary, selling your house is always an option, isn't it?
Certainly, selling your house is an option, and that's probably a major thing to consider.
Yeah, I mean, it's not something that we like to consider, but it's better than losing it.
Certainly, because when you lose it, you lose tens of thousands of dollars in equity that you've accumulated in your house.
Okay. Sometimes you'll see something called a yield spread premium. Ms. Franzine, what is that? And is that another predatory lending technique, or is that something that depends on the situation, can be either legitimate or not?
It depends on the situation. I mean, there are very legitimate times for there to be a yield spread premium, but basically, you know, I would say the plain vanilla variety is when you have a mortgage broker that you deal with to do your loan origination, and the lender tells the mortgage broker that they will give you a loan at a certain interest rate, say 7%, but the broker doesn't tell you that. And the broker then tells you, well, the loan will be 8%, and the lender then pays half of the spread, the yield spread, back to the broker. You know, in some cases it's legitimate because if the borrower has agreed to pay the broker a fee in the back, they call it on the back end, and the borrower has agreed to that up front, then that's a perfectly legitimate thing. And there are even circumstances where, you know, for different reasons, borrowers might prefer to have a little bit higher interest rate and pay less points up front. So again, it's a case-by-case basis.
But there are instances, I guess, Mr. Rothbloom, when it's just another way of getting another fee financed into the loan so that you end up paying more and possibly not being able to pay it?
That's right. So we recommend that people avoid paying real yield spread premiums because that is an indication that the interest rate may have been bumped up in order to compensate a broker in a way that the broker might not necessarily deserve.
Well, we've talked so far about things that are perfectly legal where you end up signing something or agreeing to something that just gives extra rights or extra money to the lender. But can you also end up, Mr. Rothbloom, giving up some of your rights in a predatory loan?
Not exactly.
Yeah, like your right to say, get compensation, or your right to go after them if they do something wrong.
Well, actually, what is occurring now is that lenders are requiring borrowers to sign mandatory arbitration agreements, meaning that the borrower can't sue the lender in the case that the borrower was cheated, or even participate in a class action lawsuit. Where the amount
a lot of the predatory lending cases that are being brought are exactly that. They're class action suits. Right?
That's right. So really what's happening is many lenders, particularly many predatory lenders, are limiting the borrower's access to the courts so that the borrower really can't put an end to these abuses and can't seek an appropriate remedy from the lender without having to jump through a lot of bureaucratic hoops and going to a forum that might not be as favorable as the court system to the borrower.
So should you have, this is a big question, even people who are buying new homes, which really isn't an area where we see a lot of this, but every time you close on a big loan like this, everybody wonders, should I bring a lawyer with me to the closing? There is a lawyer at the closing, but they're not representing you.
No, they're not.
should you bring a lawyer with you?
I would say if you are unsure and you don't feel comfortable yourself, then I would recommend that you do. Many times a real estate broker will go, particularly in a home purchase, you'll have a real estate broker, and the real estate broker gives you just that little extra level of confidence that you need, so you don't need a lawyer. But I mean, my main advice to people, though, is to get your loan documents in advance. The lender can certainly give them to you in advance.
Are they required to give them to you in advance?
The only thing they're required to give you one day in advance of the closing is, it's called your HUD-1, which is actually a statement which goes through all of the disbursements on your loan and will include all of the fees that you've agreed to pay.
And they're supposed to do that whether it's a new home, a refinancing, a construction loan, or a rehab?
Right.
Doesn't matter what it is.
Doesn't matter what it is.
As long as it's a mortgage, they have to give you that?
Yes.
Okay.
One day before closing.
All right.
But you might have to ask for it. But don't be shy. Call the closing attorney and ask for it.
Okay. Mr. Rothbloom, we talked about housing counseling, but are there other ways? Let's say you're not, say, a grade A credit risk, and you might not be able to get a loan through the standard mortgage lenders. Are there ways, other than just going to housing counseling, that you can avoid dealing with a predatory lender in the first place?
Certainly. If a borrower is not able to get a loan, maybe with one of the big banks, the borrower might have an easier time getting qualified through a credit union. Their lending requirements tend to be a little bit less stringent, particularly with people who they've had a long history with. And also community banks also tend to have a little less stringent standards, and their basis for lending is more personal than with the big banks. So there's a trusting relationship that's been developed there, and those two types of lenders are more likely to make loans to people who might not have the very best credit.
All right. We've got just a couple of seconds left. Two quick questions. Ms. Franzine, do you expect that there will be, since we talked about how so much of this stuff is perfectly legal, and you just have to, it really is let the buyer beware, can we expect more law here to actually make it, to put in some more rules?
I think so. I think both on the federal level and on the state level we can anticipate additional legislation.
Meanwhile, though, Mr. Franzine, do we, Mr. Rothbloom, excuse me, do we sometimes have situations where somebody is being ripped off and there's not a darn thing anyone can do about it?
There are many situations where that does occur, and in those situations people need to go for counseling, they need to consider Chapter 13 bankruptcy, and they certainly need to go see a lawyer.
Be very, very careful. Thanks to both of you for being with us on this edition of The Layman's Lawyer.
Thank
We
you.
appreciate it. Next week, your boss says it's time to take that routine drug test. Is that legal? Drugs at Work, next week on The Layman's Lawyer. I'm Dennis O'Hare. Stay tuned right now, though, for Atlanta This Week, and we'll see you next week on The Layman's Lawyer.
Major funding for The Layman's Lawyer is provided by the Georgia Civil Justice Foundation. The foundation publishes a free quarterly newsletter to teach you about our legal system. The foundation's number is 404-522-2744. If you would like a copy of tonight's Layman's Lawyer, please send a check for $35, along with your name, address, and the subject matter of the show, to The Layman's Lawyer, care of AETC Incorporated, 740 Bismarck Road, Atlanta, Georgia, 30324. Please make your check payable to AETC Incorporated. WPBA is not licensed to practice law nor provide legal advice in Georgia. WPBA and the Georgia Civil Justice Foundation are not responsible for the views expressed or the information provided by lawyers on this program. This program is offered as a public service, and in all legal matters, you're best served by retaining your own attorney for private legal counseling. The lawyers appearing on this program are attempting to give general information on how to approach legal problems. Each advises viewers to consult with an attorney of their choosing at a time when all facts may be fully disclosed